First of all, thank you for having me here. And I'd like to share with you that my marketing team thought that it's a bad idea for me to join a technical panel. But the reality is, given my hats that I'm wearing with the government, all the roads are taking us to digital. So under my domain, obviously, I look at the Abu Dhabi economy, or economic affairs, which covers the traditional sectors, SMEs, industrial, logistics, and now we're looking at more of the individuals, which is the Abu Dhabi Residence Office that attracts talents, attraction, facilitation, and retention. So we have also a special projects team that looks at now more effectively the capital markets. And in that terms, we have worked hand in hand with ADX, the exchange in Abu Dhabi, and the ESCA regulator to come up with the SPAC regulations, first in the GCC. We're also rolling out new asset classes like preferred shares and convertible to be listed in the country, given that the SPVs are allowed now to list onshore. We're looking at securitization, we're looking at tokenization. So that special project team is now evolving to 4Web. We're also working closely with ADGM and the ESCA regulator to do the virtual assets. We've already launched in the private consultation, the public consultation phase 1, and we're working on phase 2 as we speak.
So I'm from Crypto.com. One of the main reasons for here to be here today is that we're a foundation partner of Investopia. We believe it's a great forum to bring talented people, ideas to create the new economy. And we want to invest, share knowledge, content, and build this platform with the UAE. So that's one of the main reasons. And of course, we are investing in the region. And we just announced that we open our regional office for the Middle East and Africa here in the UAE in Dubai.
I'm Brady Dougan. I'm the founder and CEO of Exos. I've been about 40 years in the financial services industry, the last 25 before founding Exos at Credit Suisse, and the last 9 of that as the CEO at Credit Suisse. So when I left Credit Suisse, I saw what I thought was the greatest opportunity that I'd ever seen, which was to create Exos as the first challenger institutional financial services organization. So think about it as, Morgan Stanley, but on an Alibaba-type technology platform, offering all of the products, highly technology-enabled, but also pulling that all together in a platform. So, we believe this is really the future of financial services. We built out a state-of-the-art technology platform, 100% cloud-based, modular, data, AI, all incorporated, really powerful platform. And we've built out 8 different business lines along that, including a significant, pretty broad business in crypto. We actually think that, the digital assets area is sort of the vanguard of what's happening in financial services. We want to bring that to a much broader swath of financial services. And then I would also agree, we are very excited about the UAE's concept around the Fintech ecosystem and our participation in it. And so we're delighted to be here as well.
Hello, everyone. I'm Astyanax Kanakakis. I'm the CEO and co-founder of Norbloc. My background is actually in financial services, consulting or working in financial services. And actually, when it comes to digital assets, being the chairman of the first ETN on Bitcoin in the world, actually NASDAQ in Stockholm, and then creating Norbloc. Norbloc is a company that actually what it does is that it creates regulated data networks. And specifically in the UAE, we've created a KYC network that connects 5 licensing authorities and 8 banks, allowing customers of those to share their KYC files. So very much focusing on regulated data, identity, and KYC. And it's an honor to be here.
Hi, I'm Pulvermueller, CEO of Acronis, and well, I think I'm here to protect you all. When I listen to everyone and all the amazing things we're doing now online and how we're actually sharing data, because Acronis is the company who's focused on cyber protection. It's the combination of cybersecurity on the one hand and data protection on the other hand, which goes in all the other topics we just heard. My background, 25 years in the IT industry, so a tech geek at heart and CEO by accident. Happy to be here.
Thank you. What a great panel. Okay, so let's get to some questions. We talk a lot about digital assets and digital currency as transformational developments that will drive future financial market innovation. What is so different about these digital assets and currencies that we cannot achieve with traditional financial services today? I get that question all the time, and I want to ask it to you.
I think our view is that it is obviously transformational and revolutionary for the financial world, but to me, it's just an example of what we've seen happen to industry after industry around the world, right? Over the last 20 years, virtually every industry has been completely transformed by technology. All the old leaders who used to be, dominate those businesses took a back seat. New companies that hadn't even existed before became the leaders in those industries. And I think that's what the whole digital world is, sort of the vanguard for financial services. So, it's really technology, allowing you to use, whether it's, blockchain, distributed ledger, et cetera. It allows you basically to completely transform the way that the business is done. Our view is, though, that that's just the beginning. As I say, that's sort of the vanguard. But those are techniques that will be able to be used to actually transform legacy financial services as well. And that's a lot of what Exos is focused on, is figuring out how to use that technology to bring to the entire world of financial services. But I don't view it as that. I mean, it's really a lot like what we've seen in many other industries. Brand new technology coming in and completely changing the way an underlying industry works.
What's the fundamental change that we're talking about?
So essentially, the fundamental change is the key word in everything these days, which is decentralization. It places responsibility, potential to each user in the ecosystem, which actually allows, personally I believe it allows the following. I don't think each one of us here would like to control his or her own keys and their, let's say, monetary policy, etc. They would like to do someone else to do it for them. But through this decentralization will come then new companies that will basically synthesize some of these services, again, actually disrupting the current incumbents. And I think that decentralization, which is the key theme and key difference to previous forms of financial systems, will actually bring the era of new companies that offer a slightly different version of financial services. Some of them I could see more egalitarian in some ways.
I have a slightly different view. I don't think it's just another technology progress. It's more a fundamental shift. When the internet was created, it was a fundamental shift, and it brought information sharing globally. And what we're seeing with blockchain is a value layer that is living on top of the internet that is shared globally. Internet brought information sharing, blockchain brought value sharing. And now we're seeing application being built to leverage this value globally in a decentralized way, as you mentioned, without third party, and also very importantly, in an open source manner. And this is where we see huge innovation. People are able to build on top of it extremely rapidly because it's open, it is shared, and there are communities that are building new ecosystem around it, which is very different from the traditional financial system.
One topic which is, I think, important in that decentralization world is really to know with whom you're actually talking, who you're talking to via whatever tool. And I think the only way you can do this is through AI, where you literally learn your, not opponent, but your person opposite to you, how this person behaves. And that's actually some things we use where we see how your behavior, how do you actually type on a daily basis when you log in with your username and password, what applications do you open first, second, third, because that is you. And if you would log into his PC with the same user credentials, you would behave differently because you don't know his real behaviors. And that's where it's very important on multiple levels to really know with whom you're dealing. Only then, through the right KYC, you build a trustworthy network, which is sustainable, in my opinion.
I have a slightly similar perspective on that. If you look at banking 15, 20 years ago, you got a lot of system. It was actually decentralized, right? And they kept on adding core systems, retail system, mortgage systems. And then when the cloud came, it solved the problem. Everyone migrated and became centralized. And the banking operating model adapted to that as well. Now, what digital is bringing to the table, you're bringing technology, and the banks can adapt the technology, but it cannot change the operating model. And that's where challenger companies, such as yourselves, will come and play a big role in that.
Very good. What are some of the key developments in the area of this digital asset, digital currency space that have caught you by surprise, either positively or negatively, and why?
What caught me by surprise is how much you can earn with ransomware. Just look at the latest leaks from Conti. I mean, they made $2.9 billion, and it's assumingly a group of 10 people, perhaps? That's what you do. So there's a big business to actually steal money from others virtually.
There is actually something I find still very surprising, and it is not such a pleasant surprise. It's actually the degree or the speed of the regulators to act on what is happening. I think regulators around the world have been very slow in accepting the fact that cryptocurrencies, digital assets are here to stay, and they should regulate to protect the public, to protect companies, to actually instill a sense of security and stability even in that ecosystem. I think regulators still have a lot of ground to cover when it comes to the digital assets.
I just want to maybe add to that, because I think we work a lot with central banks and regulators, and in the last short while, I would say that they have paid a lot of attention to this topic. Specifically, obviously, in the digital currency space, but then broadening it out to digital, and obviously digital assets as well. I think that's taken off quite a bit, but that's in the last short while. But maybe more perspectives.
Yeah, I mean, I think, obviously, we could always look at the processes and think that they're going too slowly, and in some respects, I think they are. I also do think, though, it's moving very rapidly, and so when you think about how the entire market's developing and how regulators are developing along with that, it's grown obviously very rapidly, and so it's been a pretty good pace in terms of how the business has grown, and naturally I think some constituencies are a little bit behind that, but I think that's something that is to be expected from a business that's growing so quickly. I guess the piece that I'm probably somewhat surprised about, and it's actually based on. It's actually what our whole business model and all of our business models are based on, but I'm a little surprised that the gulf between the legacy financial institutions and these new markets remains as wide as it is. And I do think it comes down to exactly what's been mentioned, open architecture. It's basically a different way of applying technology to your business, but nonetheless, it's still a pretty wide gulf, and it's sort of like there's a world that was pre all of the developments with, the cloud, et cetera. And then there's the post world, and the post world is pretty rapidly adopting these, but the rest of the world is not moving to that very quickly. So, one part of our business model actually is that the technology we develop for our business, we also license to others. So we license to other financial institutions. So all sorts of things that we build in our business, we will actually license and offer to other companies. And it's still really hard. The adoption is still really slow, and it's really hard. And I think it'll pick up. I think things will go more rapidly. Whatever 1% of the world's assets are digital and 99% are still analog. So there's still a lot of work that has to be done to bridge that gap. But it has been probably slower than I would have thought.
If I may ask a question, why has the large retail banks not just acquired the fintech assets? I mean, like Facebook did with Instagram and WhatsApp and so on and so forth. Why is it not the same happening with Goldman Sachs or Morgan Stanley or whoever it is, just acquiring all these assets and then making it part of their own story?
Well, as I say, I think others will have their own views on it, but I think there's just a fundamentally different way to do business. I mean, as His Excellency mentioned, right, the advent of the cloud and the way that you actually design technology for the cloud is just different from the old way of your data center, your servers, et cetera. It's just the code is actually written differently, and you can scale dramatically, et cetera. And so, but when you have a big business with, a $1 trillion balance sheet that you're already running in the old way, the concept of them saying, well, you know what, let's pull that all up and put it on the cloud right now, it's just too difficult to do. I mean, it's just very, very difficult. I mean, as the CEO of a large bank for many years, it was just really hard. I mean, you could actually, let's say you wanted to build a new derivative system. You could get a bunch of really smart programmers and they could build a new derivative system and they bring it in and say, well, here's a technology that's state of the art for derivatives. Now you sit there and go, okay, let me see, I've got $20 trillion notional worth of derivatives contracts that I now need to take off my old system and move them to the new system. It's a nightmare. It's just very, very difficult to do. So it's just the concept of there's just such a great advantage now, just like, as I say, in industry after industry, starting the business from scratch, building the technology in the modern way from scratch is just a massive advantage. And so I actually think that's going to be a very, very difficult barrier for them ever to cross. So we'll see. But
I think the challenge as well is I mean, one side is technology and getting their head around technology, but also the regulations, the policy, the KYC, the data protection, at the same time, actually the actual policies. You're inventing the wheel. You're democratizing and taking the middleman out, right? You're doing B2C or B2B, and so that whole requires a new operating model, which is a challenging operating model to put. I think regulators are taking it seriously. Today I was in different sessions. The word crypto or digital assets has been mentioned in every forum. You see it growing very fast at a fast pace, so it's a matter of time. I believe it was surprising to see how fast it grew in the past 2 years, given the pandemic. But I think regulators are taking it seriously. They're learning about it. They're already thinking, how do we create, moving from regulating a single asset to actually a framework, which is a great leap forward for regulators to think about creating a framework that's more flexible and agile to adapt to the new incoming asset classes.
Maybe to build on what His Excellency said in terms of value creation, I think what surprised me is how fast value is created when there is a nascent product market fit. We saw it when DeFi emerged in the summer of 2020, and today we have about $250 billion of assets in DeFi. This growth is extraordinary. We saw the same happening for NFT. Volumes today is in the tens of billions per month. And it's just an initial product market fit, and so much value is created. So much value also is at risk and needs to be protected. But that for me is always extremely surprising. Knowing that we're so early, but this initial market fit generates globally so much value creation.
May I actually comment something on this? Because this is a topic that sometimes troubles me. And it troubles me because I look into the crypto market, I look in DeFi, I look in NFTs. I do not know how much of that is speculation versus actual use. And this is what troubles me. Because right now, if I look at crypto, I see a lot of speculation. If I look at NFTs, I see a lot of speculation. DeFi, again, the same. And I think we have to recognize that if something doesn't have underlying value, implicit value, whether it's centralized or decentralized, it will not have value.
It's a great point, but I don't think speculation is an issue per se. There is people trading equity, bonds, and they speculate on the market. It doesn't mean the equity and the bonds have no value. I think as a foundational piece of building an ecosystem, you need a strong trading infrastructure. You need liquidity, you need custody, and you need people who are willing to make the market and speculate on it. And that's fine. For me, it's a building block where you can have use cases around digital ownership, tokenizations, and lending, borrowing, payments, all these great use cases that people get value of. But if you don't have that base trading liquidity, and maybe there are speculators, maybe there are holders, that's fine, but it needs to be there for the environment to thrive.
I would just add to that, I think the DeFi development is really interesting in that, to me, this is obviously an early stage market. And so you have, when you look at a completely developed market, there are lots of different elements to it. You can borrow, you can short, you can do all sorts of things. And obviously the crypto markets are just developing along that line. But that's one of the most interesting things about the rise of DeFi, right? What it basically allowed you to do was borrow, lend. And before that, you didn't really have an ability to do that. And so that makes the market more limited and a little more brittle, I'd say. So as these things develop, I think it's all very healthy for the market, because it creates a broader and a more comprehensive infrastructure for the market overall. It's a very healthy thing, actually. So now, not everything that happens in DeFi, that's happened in DeFi was legitimate or was correct. Maybe some of it was too much based on speculation. I completely agree with that. But overall, I think it's a very healthy direction, because you're actually building out sort of the infrastructure of the product and the market. And that's something that's going to be very, very healthy.
And I totally agree. I think the biggest challenge here is the balance between how many things go right and wrong. Because as soon as you lose trust, then the whole system falls apart. And there's been a lot of scam happening there, and many highs very successfully. So I think it is a very fine line we're walking right now. So
speculation is healthy. We're all in agreement. But I think appropriateness and mis-selling is important as well. I mean, if you're addressing a product that is for the masses, where you go to the B2C, I think regulators have to think really closely how do you really do the appropriateness, the fit and suitability. How do you target? I mean, today we have kids in high schools. They all have access to the internet. They could open an account and trade. Okay, so we need to really wear the hat of also worth preservation. How do we, if this is going to be the new language, 20 years ago, they taught me how to use Outlook and PowerPoint. Today, they're teaching kids how to use crypto and Instagram and whatnot on social media. So what I'm saying is that there has to be also a certain procedures for appropriateness. There has to be controls on that, and we have to balance it out. Yes, you need the volume, you need the scale, you need the shorters, but it's an educated decision, not a blank decision. And I think a lot of companies today that are coming out, and there's a lot of them, which is surprising to me, do not really take these regulations into consideration.
It's one of the things that we've worked a lot on is providing products which do have appropriate risk and moderated risk profile. So, and that's one of the things that these various different developments in the markets allow you to do. So, we're talking about guaranteed principal, upside notes, things like that, where they're risk moderated. And in many cases also they're easier to access. Not everybody wants to do the hard wallets and all those things. So actually creating those bridges for people in a risk appropriate way is something that I think is really an important function. And now that can now start to develop more. So we're offering some products like that can develop more now, so that you do end up with a more, it's not just the full octane, risk of up and down in the market, but you can actually moderate that somewhat.
We hear a lot of sort of comments around the whole DeFi space, and I'm glad that we sort of jumped into this topic, but at the end, is this a hype bubble that will eventually pop, or do we feel that this has a long-term sort of life, long-term future in finance, DeFi specifically?
It's here to stay. I think we probably all share that vision here, and that's also cryptocurrency, digital assets, is a big topic for Investopia and for the UAE government. There will be ups and downs. There will be evolution, more risk management tools coming on board, better education, which is critical, financial education, financial literacy, so people understand the risk. But it's here to stay, and it's going to continue to grow. And we need to learn, and we need to put the right framework in place to continue to have such rapid pace of innovation, and at the same time protect consumers from these risks.
I would say that certainly I agree that it's here to stay. I would actually split the financial services in two buckets. One is trust-based and the other one is price-based. Price-based, certainly DeFi will accentuate the change between the different players, the leaders, the losers, etc. Because it's going to be very quick for someone to set up, to offer services at a competitive price. What we see now with neobanks. Trust-based services, I don't see them changing hands very easily. And this is a thing where the banks are facing to see that this is their strength. It's not the price-based sensitive services. So equity issuance, debt issuance, advisory, these are the ones that should be focusing on because they still have an edge, which is it takes a lot of time to actually gain for someone. So DeFi, certainly here to say, I would say still you're going to see some centralization in DeFi because clearly you're going to have some people that win in the game and become bigger. And much more so in price-sensitive services. Trust-based, still, whether we like it or not, I think the banks will play the incumbents will play a big part in them going forward.
And I guess from a regulator perspective, I mean, there's a lot of need for oversight and regulation in the whole DeFi space to protect investors and the consumers and so on at the end of the day, which is key. How much has to be done in the next short while in order to, I guess, meet the demand that's coming out there with regards to those investors?
It is. I mean, it is a real challenge. I mean, the very nature of DeFi, right? It's kind of purest form of decentralized finance, obviously. And I think there is a real challenge with trying to make sure that we find the right ways to regulate that and to keep it operating in a trustworthy way. So I do think that's a challenge. I don't think that's going to slow it down. I think we can figure it out. I think we have the technology to do that. But that is going to be, and that's going to require some partnership as well, I think, between the industry and the regulators.
And I think that you made a very important point. The technology is here already. So, and I think to your point, I think when you start with small things, where people get used to it, and things break, but when they break, it's not relevant. I might have lost my pocket money, but I haven't lost my house. So, and that's where you start, and then you learn, and the whole system learns, and the regulators learn how to actually deal with it, and then ultimately you'll get there. But I think it's small steps and ever bigger steps. That's how you get there.
I think in the days of supply and demand, it might work in a region, work in another. It all depends on the ecosystem around it, the demand and the supply, the regulator. If it's not working now, I believe in innovation. Innovation is here to stay. Whether it's going to, take its place today. I mean, we saw the SPAC market, for example, was a very interesting market 2 years ago. It bubbled in the U.S. Everyone said the SPAC market is shut. I still believe in this region. There's merit to have it because, again, it was a bubble in the U.S. because everyone raised money. It was open. Then they couldn't find targets. And they didn't understand the assets they're acquiring overseas or cross-border. In the Middle East, it's a beautiful market for acquisitions and consolidation. It's an untapped market. So it makes sense that you have the investors from here, the regulator from here that understand the flavor of the regulation and what's required in this market, right? And the trading activities and the supporting ecosystem for it. So I think the same goes back to, and I'm not giving apples to apples here, but I think any innovation will get its time at the right place at the right time.
And I think as an entry point for regulators, making sure the interface between the traditional assets and fiat money and digital assets are controlled, fully regulated, that there's proper KYC, AML policies, I think is critical. And I think it's a good entry point as we all learn and regulators learn more about the innovation that's happening in the DeFi space. And as a company, Crypto.com, that's how we set up our business with the foundation of compliance and security, understanding that we're going to build that bridge, we're going to introduce the technology to the mainstream. And it's important to make sure it's done in the right way, especially when we are to connect traditional assets and digital assets.
Now, let's pivot a little bit to a topic that's very close to my heart anyway. I spend a lot of time in this space, and let's talk a little bit about central bank digital currencies. CBDCs have certainly made it center stage in many jurisdictions. There's a lot of talk about it. A lot of central banks and regulators are researching, experimenting, piloting, and even in some cases implementing CBDCs in their respective countries. What do you think the impact will be on the market and on investors when these CBDCs become more mainstream? I'm
nervous, I have to say, because I got my digital wallet and it can go up and down based on some idea of someone, and that makes me nervous. My cash in the hand is a system, but that's one part. The negative or positive tax, this is something I'm really nervous about. But I'm protecting that money in the wallet. I'm not here to be the financial expert, so over to everyone else.
But you're nervous because of what exactly?
Because it could just happen overnight.
What, the price change?
Yeah, no, just like I think in some countries where you have a certain social scoring, and subject to the social scoring, you suddenly get a certain interest, positive or negative. It makes it very controllable.
Nervous about the interest part. Okay, not because it's usually central banks. CBDCs are pegged to the national currency, of course, right? So there's no volatility in that sense, but the interest part makes you nervous. Okay.
Clearly it offers tremendous operational efficiencies. At the same time, as with any cryptocurrency, it offers a lot of transparency over transactions. But also, it can offer a lot of control of someone over the transactions that happen over a currency, especially if it's actually one central party that coordinates the transaction processing. So that worries me a bit. It places a lot more emphasis on the role of government and the role of government versus its citizens. If it's a benevolent government, then it's great, but governments not always are.
I would tend to share those concerns. I think, first of all, the way CBDC are being looked at, they're not really cryptocurrencies. They will be in permissioned blockchains or other technology where there is control. Actually, there's decentralized organizations around blockchain and cryptocurrency. This will be different for CBDC. So we have to be mindful of that, and the implementation will be quite key. I do see some use cases for distributing directly to low-income families vouchers and building economics and programmability into CBDC. But at the same time, I also see the risk. So it's going to be really about implementation. Where I see it happening maybe in a safer way is on the wholesale CBDC. We're talking a lot about retail CBDC, but wholesale makes a lot of sense. And I think there's a lot of countries like Singapore and the UAE and other markets that are working already on this project just to make the movement of funds between states, between central banks and even companies more seamless. I think great potential there.
I think it's fit for purpose for the wholesale market first. I remember when we started doing the derivatives transactions here, it started by the demand from the corporates and the wholesale, and it evolved, and then you start seeing the central bank hedging themselves and their currency and the reserves and whatnot. So I think the wholesale market will dictate that, and then the central bank would decide is this something for them, and they adopt it. But I don't think creating it for the sake of creating it.
I agree with all the comments that were made. I mean, I think it's a useful idea. I think it can be. I think there are uses for it. I do think there are obviously risks that becomes the sole currency. But I mean, if you had digital alongside cash, then that assuages some of those concerns. And I don't think it's going to have any impact on what we view now as the cryptocurrency market. I mean, it's just a completely different sort of vertical of monetary consideration. So, but I think it's an interesting idea. I mean, for all the reasons that we mentioned, it's easier. It can be ease of use, and it could be a positive to be able to track it. It could also be a negative in some cases. So, having alternatives would be good.
So coexistence with crypto in the digital asset world, of course. Yeah.
John, I have to also mention something that as fairness, I should also talk about governance in cryptocurrencies, because this is a topic that is not addressed enough. When we invest in FX, we know about the Federal Reserve, we know about the central banks, typically when they meet, what they decide, etc. But I very much doubt that a lot of investors in Bitcoin or Ethereum know about the governance of Bitcoin or Ethereum. And there is a governance. And it's not as simple as, yes, everyone comes and votes and they decide. There is a governance. Unfortunately, not many people know about it. And I think this potentially could be a problem, especially if they become even more important in the economy, cryptocurrencies.
We find that to be a very interesting topic, and I agree with you that I'm not sure everyone appreciates it and not sure everyone understands it. I mean, we actually have mining operations, and we mine some of the non-mainstream current, coins. And you can actually find, we've actually found in some cases we could be 33% of the outstanding nodes, et cetera. So then you become a very important part of the governance. But, I don't know that I would agree that it's so different from the foreign exchange policies of a central bank. There's still, those migrate over time as well. But I do agree with you. I think it's probably an area that is not nearly, doesn't get the focus that it should get. I think that's absolutely right. And because you really don't hear much about it. I mean, once in a while there's a fork or it'll come up, but people, that's an important aspect of it. But
yeah, I think you're touching upon a very interesting topic, which is decentralized governance. And it not only applies to crypto, but new companies and new way of working, leveraging cryptocurrency, DAOs, as we call them, those decentralized autonomous organization system, to make decisions collectively based on your ownership, based on other parameters, and your history, your contribution to that company and to its growth. So this is still early. There's a lot of experimentation, but this is a big piece of the future as well. So I think it's very important for everybody to learn, to experiment. It's very hard to do properly a decentralized governance, but there's a lot of benefits to it, and it really connects all the participants of the ecosystem to its growth and its potential. And I think that's quite unique, so it's worth exploring.
But how do you think can we implement these governance systems? I mean, it was just when you said you suddenly had 33% of one crypto under your control. That sounds scary.
Not suddenly, but I mean, we knew, we understood, but we did have, yeah. I mean, for off the run coins, you can definitely end up with a larger percentage. But that's a good thing, because then we have more control over the governance. So it's not necessarily a scary thing. It's a good thing, because then you have control over the governance. But yeah, I think it's something. Again, I just think it's got to be. Certainly people have to have their eyes open when they invest in particularly off the run type coin. But also it probably does. I mean, this may also be something that's appropriate for a regulator to at least have transparency and visibility in over time.
The interesting point here is, as more value goes to the space, it becomes more secure in most of the blockchains. So as the space grows, actually the security grows with it, which is a very interesting property. So I think we should all work to make it grow so we have actually more secure assets for users.
Let's pivot, I guess, to regulations, right? Currently, regulations on digital assets and digital currencies are quite heterogeneous and ripe for arbitrage from the wider market. Do you envision a world with clear, more aligned regulations, and what kind of opportunities will this enable for investors?
I think that's a correct characterization. As I said, I think it's an artifact of the stage of development of all these markets. And it's not necessarily a bad thing, and yet it creates opportunities both for companies like ours. It also creates opportunities for investors. I think over time we will see, both through regulation but also through the actions of players in the markets, a lot of those, as you say, heterogeneous approaches will become more homogeneous, and it'll become a more seamless market over time. And I don't view either as necessarily better or worse. I mean, right now there are opportunities because there are these disconnects between markets, and there are players who are working to actually pull them in line. Over time, I think as it does become a more seamless market, the volumes will be higher, it'll be a more dependable market from that point of view. So I just think it's I just view it as part of the natural evolution of the markets. But
we tend to agree as well, but I do feel if you want to have an impact in the market where you operate, you do need actually to set up offices, get a local license, have hearts and mind in that country if you want to go at scale and grow the industry, grow the business. So although you could set up in some remote island with some advantages there, you won't be able to operate in the key markets because you need to have that local setup anyway. So though there is a bit of arbitrage that you can do, if you want to win and you want to grow the space, you have to localize and you have to work within the local frameworks.
I second what he's saying. For us as government, I mean, 30% of my daily meetings now are with crypto companies and digital assets, and I think it's very important that communication in the local market and investment in the market that you operate. You get the market you operate in, and then gradually expand. And when you get the market, you put your boots on the ground, you put your resources, you understand the regulations, you build the regulations with the regulator. And I think once that whole public-private partnership, that will spin off and have a more of a overarching structure at a global level, or cross-border, even starting by regions or starting by cross-border.
Will better regulated markets give opportunities for foreign investors as well? So as the regulation rises in terms of maturity, will that just attract more investment from abroad? I mean, I guess because that's digital assets have no boundaries at the end of the day, right? In many respects.
Well, actually, I think it's better regulation will attract more less savvy investors and retail investors because they will feel more protected. Nevertheless, regulatory arbitrage is arbitrage, and savvy players will try to actually make money out of it.
Climate change is at top of minds at boards and executives around the world. Everyone's talking about this topic, investing in it, and requiring sort of investments, a certain amount of their investments be placed in digital, green, or green sort of assets and so on. How are digital assets and currencies, from energy-hungry Bitcoin to digital green bonds, addressing the needs of a more climate-friendly world?
I think anybody who's involved in these businesses who's not focused on the sustainable element of it is crazy, because there is no question that the sustainable element of how this crypto is created, et cetera, is going to be a very, very important focus. So you saw recently in the U.S. they came out with a sort of white paper about how they were going to approach it, and sustainability is clearly going to be an important part of that. And we've already seen massive shifts in the market, right? You've seen China basically say no more mining. Miners are all basically migrate into the U.S. and into other parts of the world, and I think it's going to be the same thing with regard to sustainable power sources. So I think that's something that's really important. So everyone should be thinking about this in their investing, in their businesses, etc. And I think but I think there are ways to create opportunities around that. So for instance, right now Exos has an equity stake in a very large, 200 megawatt development of a mining center that is 100% hydro. So it's 100% sustainable power. And my view is that that is going to be a facility that's going to be more and more valuable over time because it will become, less and less acceptable to create power for mining from, non-sustainable sources. I mean, we've got some other. I mean, we're also creating we're creating an instrument and probably an ETF where it will actually have an ability to invest in digital money type companies, but with an ESG overlay. So basically making sure that those are companies that are participating in the markets in an ESG sort of way. So I think it's a great question, but it's also one that is absolutely going to be an important aspect, and anybody who ignores that is going to run into trouble.
Actually, there are some positive elements as well. I think when we talk about ESG and when we talk about how green you are around crypto and blockchain, we're focusing too much on mining. But at the same time, the technology can play a big part in power trading, whether even from IoT, from smaller devices, can help in terms of trading credits, licenses, in terms of creating ESG credentials that then remain constant and immutable across markets where you operate. So I think the technology itself can actually very much support the transition to a greener economy.
That's a very, very valid point that is often missed, actually. It actually plays a part in getting some of that surplus energy or other mechanisms that is actually useful and remove waste. But I would say it is true. Any businesses, traditional finance, or even tech companies like Google, when you do a search, you are consuming energy, and we need to be mindful and create businesses that use it efficiently as much as we can. If you look at Crypto.com, as a company, we've made the commitment to be carbon negative by the end of this year. So very bold, and we're working through it, not only by looking at what we generate in terms of carbon emission as a company, but going, as we said, step 3 or phase 3 of our assessment, looking at the impact of outside of our company, of our transactions, withdrawal, deposit on the blockchain, and looking how to reduce or offset that. I think that's first. Second, as an industry, education and explaining the usage of renewable energy or other type of energy is important to educate globally and people understand what are the real numbers and the real energy consumption. There's still a lot of misunderstanding on this topic. But we can also create blockchains and technology that are less energy consumptions. So, for example, proof-of-stake mechanisms, these new blockchains that have emerged over the last 2-3 years, consume maybe 100,000 times less than Bitcoin. And so there are technology solutions as well to improve energy consumption. And then beyond our own company, the industry, we need to look at global solutions. The industry is about 0.3% maybe of the emission of carbon globally. So if we want to have an impact, we need to look at financing technology that really capture carbon and have an impact globally, not only within our scope. And we're setting up a foundation to just do that and focus on investing and supporting technology to really have an impact on climate beyond our industry.
But I think you made a very important point, is that yes, it's a small fraction right now, but frankly, when we build efficiency and environmental governance in it today, when everything grows and becomes bigger and bigger, we will be very environmental friendly and will be efficient. And I think that's important. If we don't start now, we will never get there. You might end up with the discussion with the dinosaur banks, I call them now, who just can't move anymore. And I think that's very, very important. And I think that's where the press and frankly also the push from the market was important, that we all started to think about it. And in our case, our application runs 1 million of devices, and we have a dedicated initiative to just optimize it, because every compute cycle we do not need is one compute cycle which is saved, which just saves power. And when you save power, you save energy.
I think we've been focusing mainly on the energy, which I think more or less will influence the mining piece of it, the decarbonization. But you also have two pillars there, which is the social and the governance, which I think by default that's a gross aspect of it. But knowing that Abu Dhabi is going to be hosting the COP22, it's a double-edged sword. I believe right now it's into fashion. It's important. It has to be there. If you remember right before the subprime, when they had the Sharia compliant, it was also in fashion at the time, and everyone was like, because Sharia, Islamic Sharia does not allow gambling, human trafficking and alcohol and whatnot. So it was morally something that a lot of the investors had an appetite for, and it was used, but then it was also at the same time abused. Now, when I say abuse, and it's in fashion, those two words are very important. One, it's important to see the transformation of it. So the reporting, the assessment of it, and there's obviously 3 verticals with endless variables that you need to do. So one, having proper assessment tools or company that does that. 2 is the term, for me, greenwashing. It's not that you have a stamp that makes me comfortable investing in you. I want to see really what's under the hood and your transformation roadmap for that. That's what I want to see. That makes me, as an investor, confident. But to see that everyone has a stamp, it's going to be a marketplace for it. And it's going to be a new industry like Sharia. I remember there was too many Sharia boards assigned and whatnot. And that, at the end of it, that happens. It will throw a burden on a company like his because he'll have to bear the cost. It's not going to be cheap. So I think we need to really, and this is something that I'm a preacher of, we really need to think how we do the rating, how do we do this transformation, and really regulate how those companies are coming up with the roadmap.
Let's move on to, I guess, maybe some more technical security-related topics. There are different risks associated with these new types of assets and currencies and so on. And when you're dealing with, you have to manage complex cryptographic keys that, if done wrong, can cause loss of control, ownership, and of these assets. There's countless examples in the crypto world when it's gone totally wrong, and we're now building sort of the infrastructure for these new types of assets as well. How can we secure the technology and infrastructure in a way that provides a level of comfort for regulators and investors?
Well, at the core for us, do not trust anyone. So that's where it all starts, and check everything. I think this is really at the core, no matter what it is. And I would like to give you one number here. We know that about 30% of all attacks and all things which went terribly wrong, went wrong from the inside. 80% unconsciously, 20% consciously. So no matter how you look at this, really just you have to cover from all perspectives. And that's where also regulation comes in, being able to actually find the root cause and help to figure out what went wrong to make it better next time. But that is at the core of everything we do, not 4I principle, 6I principle, and don't trust anyone. That's how you get there.
That's hard to do when you're building a new system and you're telling investors to come and invest in this new product. How would you?
It is very hard at the beginning. I agree, but it's one step at a time. You win one customer, then you win 2, 4, 8, and so on, and then you get there. And when you have that, do not trust anyone in the core of what you do in the business, then you can actually scale indefinitely without truly running into trouble.
I think the zero trust model is fundamental, and you have to have that in your DNA, in your company, the way you build software and the way you roll it out. It's critical. I think it's a journey for customers. They will first go usually on platform that kind of abstract a bit of the technology, like the Crypto.com app. But then they will learn more about the blockchain technology and start having wallets and take control over their own assets, their keys. But it's a journey. You can't throw customers directly into this complex world. And I think it's very important for us to educate and bring people progressively through that journey. And for customers, I would say you need to look at where the company is investing its profit. Are they acquired the right level of certification? Are those certifications just stamps? Or do they require continuous audit and continuous pen testing of their security systems? Are they protecting your data? Do they have the right ISO certification for data privacy? Do they follow GDPR? Do they have business resilience plans that are certified as well? Again, continuously. Those criteria are very helpful for people to make their first step and select the right platform.
I very much agree with the points already covered. I would also add the legal security element. Because actually a lot of the things that we do, I mean, with Norbloc we deal with private data, with sensitive data. And I have to say that for the first year, the majority of our expenses as a company were actually to lawyers. Because apart from the pen testing, etc., you have to do legal stress tests of what you're building. Because that could be a huge problem for our clients. So aside from the security, the typical tech security of the platforms, Because we're doing something so novel, there's a lot of work to be done on the legal framework and legal review and audit of what you're putting together.
Yeah, I would agree with what everybody said. I mean, one of the things that we're trying to do at Exos is to build a bridge, a little bit like what we talked about before, which is, I think it is a process of education, people getting comfortable. Not everybody's at that level. I mean, we've talked about some pretty technical things here, even in this panel, right, in terms of governance issues, et cetera. There's a lot of detailed knowledge that's necessary. And I do think it's a question of bringing participants up to speed on that. And so one of the things we try to do is create these bridges that help to make it more secure, through an element that we provide. So as I mentioned, maybe it's reduce the market risk, maybe it's reduce the logistics risk on it, maybe it's reduce the legal risk, and so that they don't have to go straight into a pure environment, but rather we try to mitigate that for them through some, say, structured products or things like that, which we think is going to be, there's still a very large world out there of legacy or non-crypto knowledgeable investors who are interested in the market. And I think that's a better way to get them inured to the market, accustomed to it, is through those kinds of products. So that's a big focus for us.
Yeah, I think you made a very important point, really bundling it with our subject matter expertise into something which a non-expert can actually consume. I think that's what we are doing, and that's what really helps.
That's a better way to put it.
Well, this is an invite for you. I mean, end of the day, we as government, Department of Economic Development, our main aim, we understand the market gap, and the regulators are regulators. They're always going to be regulators. They have the BAU, they have the supervision, the listings, and all and whatnot. So I think we position ourselves as the special, we call it special project, or you could call it the special tank force that will think about how do we work with the ecosystem, whether it's from the security angle, whether it's from the legal and the legislation. Again, legal is challenging here because crypto in this part of the world is new. You're not like talking to a lawyer from Silicon Valley or New York, right? So the reality is you will need that line of expertise and educating. I'll give you a good example. I'd like to refer back to SPAC. When we brought SPAC here, most of the lawyers in the region had no clue how that regulations work. So now we're teaching them how, but we use international lawyers that have, and not any international lawyers, because SPAC is only in the US. So there's few players there. So the same goes with crypto. So my invitation to you is, if you have your ecosystem, your lawyers, your administrators, your custody, your clearinghouse, bring him, let's talk. Let's start putting something together. And I think we have the team and we have the local knowledge to lobby and get it done for you.
It's a great call to action. Right. I think we have a couple of minutes left, and I just want to maybe just look into the future and then get a prediction from each of you, actually. We talked a lot about digital assets, currencies, new new financial instruments being implemented, developed, and your own businesses that are looking at doing that. But it's not mainstream yet, right? So it's going to be it's still a little bit away. But how far would you say? Are we 2, 5, 10 years away from this? And maybe just a short description of why.
My background, I come from global market sales. So I always close the deal before I even put it together. I think 2 years. 2 years, you'll see a different UAE.
Okay, very good.
I would say for the industry, if I look at the number from last year, we had about 100 million people using cryptocurrency globally, and we moved to, by the end of last year, 300 million users. Not yet mainstream, but getting there. What we're seeing and hoping this year by the emergence of new use cases, and we talked about that explosive growth that we expect hopefully now from it, potentially in gaming, and powered by blockchain and NFT in particular, we could go to up to 1 billion users this year or mid next year. That's already quite mainstream. And then down the road, we see social networks connected to the blockchain as the next wave to go to the 2-3 billion. This one, maybe 2 years, 3 years, 4 years. Yeah.
I think we're very close, but I do think that the real measure of how mainstream it is actually how much of the assets in the world are actually being processed through blockchain, distributed ledger, et cetera. And right now, it's still about 99% non-digital and a small amount. So I do think these technologies, which again we think are very important to try to convert analog markets and assets into digital, are going to be very important. Because if all we do is create, if only the new assets that come on are digital and all of the historical, all the legacy assets that are out there remain analog, it's going to take a long time. So we're going to need to find ways, and we've built some technologies that we think are like the last mile solution for sort of blockchain for traditional assets. So I think that's going to be critical.
I didn't hear a number.
I think in a couple of years, definitely it'll be ubiquitous, for sure.
So actually, I'm going to be the bearish one here, almost bearish, and say 5 years. And I'll say 5 years because I see a correction, a big correction coming up, where you're going to see actually cleanup. I would say it's a pretty harsh word, but I would say cleanup of the industry. And but after these 5 years, you're going to see players from the traditional finance and government coming in, and the uptake will be tremendous. And I think there will not be any panels about digital assets or blockchain or NFTs because they will be all around us. There's not going to be any point talking about them anymore. So 5 years, my number.
I'm an optimist, so I'm not saying 10 years, but 5 years. Let me explain you why optimist, because it's still too difficult to use. I mean, as soon as my mom starts to use crypto, then I know it's mainstream. And we're not there yet.
Thank you. We always tend to overestimate sort of the time and underestimate the impact. So at the end of the day, all these are predictions. So thank you very much. I think our time is up. It's been great having you on this panel, and enjoy the rest of the conference. Thank you.